Hey everyone, me Kevin here. We need to discuss Jerome Powell and the Federal Reserve. The meeting is in a few hours. By the time you're watching this, it could be in a few minutes. Write your clock or the time down. 11 a.m. Pacific time. That's 2 p.m. Eastern time. Okay? Calculate it if you're a different time zone. What do we need to pay attention to? This, my friends, this right here. This is the summary of economic projections from September. We are going to get a new one. Right now, markets are convinced that Jerome Powell is just going to tell us, look, we're going to be data dependent. We're going to punt this meeting. We're not going to say anything. This is why we have to parse the meeting. This is why we have to pay attention to the meeting. Because there are two things that are going to happen. Number one, right at 11, we're going to get the summary of economic projections. Number two, we're going to get Jerome Powell's commentary on it. Usually, Jerome Powell's commentary is very powerful because we could see numbers on the summary of economic projections, which I'll give you my projections. And then you get Jerome Powell's commentary in terms of which way he leans. So let's take a look at this. These are my projections. So first, I think they're going to cut the change in real GDP down a little bit from their 1.5% projection. The reason I believe that is Jerome Powell had two chances to go all hockey-docky on us, and he did not choose to go hockey-docky on us. Instead, he chose to stay neutral, which is, we may raise rates if we need to, and no real hawking, even though financial conditions are loosening. In addition to that, as a result of that, rather, I should say, I think Jerome Powell is starting to suspect, along with the Fed, that GDP might start trending weaker than it has been. If you look at the Atlanta FedNow real GDP indicator, which we get our next read on that tomorrow, or the current read is about 1.2% GDP read for Q4. I actually think we're going to see that revision to 1.2% for the entire 2024 forecast. So that's going to mean weaker GDP. That could be bad for some stocks in the short term because it does potentially mean weaker earnings. So 1.2 on GDP, I don't want to see a handle under 1. That would be bad for the stock market. I do think we're going to see a bias up on the unemployment rate, probably move that up from 4.1 to maybe 4.2 or 4.3. If it goes any higher than that, it would be problematic. So any kind of move like 4.5 back to the June projections, we don't want to see. PCE inflation. I actually think they're going to take a 10th off of the projections on both of these. Remember, these are average projections of all of the different voting board members, so it's not like it's coordinated, or maybe it is and they just tell us that it's not. Then since after all, it is a messaging tool. Remember, Jerome Powell calls the summary of economic projections a snapshot in time and a messaging tool at that time. And if it's a messaging tool and you control the sheet, you could theoretically be like, hey man, the average is coming out to 5. Bullard, I need you to come in a little lower so this average comes in at 4.9. You got it. Oh wow, I've changed my opinion. I wouldn't be surprised. But anyway, I think we're going to go for a 4.9 on the Fed funds rate. That will signal 1 to 2 cuts. Remember that the current rate that we have is 5.375. That's the midpoint of the lower and the upper bound. And so if you take 5.375 minus 0.5, you get 4.875, which basically rounds up to 4.9. That would mean the Fed is pricing in 2 cuts for next year. Markets are pricing in 4. Last week, markets were pricing in 5. So obviously, anything less than 4.9 would be bullish, mostly because the Fed, nobody really thinks the Fed's going to go super dovish here. If we get a dovish Fed, it's going to kind of be like, you're either really convinced on inflation or you're starting to panic. Okay, then obviously we've got to parse what Jerome Powell says. I don't think we're going to hear anything on opportunistic disinflation. I thought of an analogy. I kind of think of opportunistic disinflation as kind of like opportunistic weight loss. It's kind of like, let's say you're trying to lose weight, and then you're working hard and it kind of feels sticky, like your weight's stuck, it's stuck, and then it moves down a little bit, and it's sticky, and it moves down like this. Opportunistic weight loss is like, I feel slightly under the weather right now. You get sick, or like you have salmonella or the stomach flu or something like that, and then you just don't feel like eating because you can't keep anything in anyway, and then your weight like plummets. Opportunistic weight loss. Now just don't add it back. So that is what the Federal Reserve basically used as an inflation policy since the early 1980s. And the thesis, of course, was that we could kind of move with the market cycles. Quick note, I hope to get my HouseHack update video out today with probably another. I want to get 2 out this week, so stay tuned for that. It's done editing. I want to add some commentary to that. So I'm really excited about that, so stay tuned for that. We're killing it. We're doing really, really well. The wedge deals are going. The construction team's going. Everything's firing. So it's very good. It's still a startup though, so obviously it's, I'm like with sandpaper every day, like, what do we make sure that's like that? Make sure that's like that. Trying to like finish the edges. It's good. Like the Cybertruck edges. Oh. Anyway, I wouldn't be surprised for markets to be very volatile between now and after the press conference, since we really need to digest what's going on. And then, of course, we have a flash sale going on today and tomorrow for the brand new gold courses. We've got a bunch of new lectures coming out at the end of the month as well. We'll touch a little bit deeper on some of the stock fundamental analysis and some of the other recommendations that you had specifically for real estate. A lot of interest in real estate, those new Verse Pro courses. So check those out at meetkevin.com. A lot of them already live. Appreciate y'all for being here. Good luck today. We'll see you soon.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.